The pound rallied against 0.6% against the US dollar, hitting close to a 4-week high. The benchmark major US stock indices rallied for the fourth consecutive session on the backdrop of growing and firmer interest rate cut bets for the December FOMC meeting, and as well as the Aussie dollar rallied against the USD on the backdrop of resurgence in risk-on behavior. Good morning to all. I'm Kelvin here. Welcome back to your daily dose of market insights. Today will be the Thursday, the 27th of November 2025. So as usual, let's have a quick look at the disclaimer first. Leverage trading carries a high degree of risk and may not be suitable for everyone. Losses can exceed deposits. This presentation is for general information purposes and is not investment advice. Past information is not representative of future results. All right, so as usual, let's have a quick recap what has taken shape yesterday in terms of news flow, events, and as well as economic data releases that has an impact on the intraday movement on the broad-based cross asset classes. So yesterday, big move was the continuing weakness on the US dollar that has come in as expected over here. So what do I mean by this? So if we look at the US dollar index as a gauge of a general benchmark strength on the US dollar weakness or US dollar strength. So I could see is that I do mention that the US dollar index is still trading in a complex sideways range from a technical analysis perspective since the low of the 1st of July this year. And in the last 2 weeks, the bounce in the dollar strength has hit a medium-term range resistance zone of 100.10 and 100.54. And what's interesting over here is that since last Thursday all the way up to the start of this week, which is on Monday, it started to form a spinning 3-day or spinning top daily candlestick pattern, indicating that the last 2 weeks of rally or the rally from the low of 28th of October and 14th of November is losing strength, which indeed it did so, where a bearish reversal candlestick has taken shape on Tuesday and as well as on Wednesday, where we see the daily candlestick closing below two key moving averages, which is the orange one over here, the 200-day moving average, and the one in light red is the 20-day moving average, indicating a high probability move that it may move down lower towards the middle part of the range of this complex sideways range configuration. Two key support level to watch as we end this week will be at 99.25, followed by 98.67. So what causes the dollar weakness yesterday was actually due to two key risk events, which is the RBNZ, which is one of not really a major currency, but it do have a feedback loop impact on the FX market, where RBNZ yesterday signaled to the market that after its interest rate cut in the Asia session, more or less is approaching the end of its interest rate cut cycle, very similar to the Australian Central Bank as well, the RBA. So what I could see over here is that this particular is a 5-day rolling performance of the dollar against other we call it popular traded currency, or I'll say major currency, I would say. So how do you read this particular chart is that dollar will always be the base currency. That means $1 equivalent to how many currency, which is the variable currency like the sterling. So I could see based on the 5-day rolling performance, it's a very short time frame. It's a 5-day window, moving window time frame. The dollar is the weakest against the Kiwi, which is the New Zealand dollar, down by negative 2.47%, followed by the dollar is the weakest against the sterling, down negative 1.37%. So what I could see over here is that yesterday move of the FX market, where we see this dollar bearish reversal candlestick on the US dollar index, is driven by dollar weakness on the Kiwi and as well as the sterling. So what causes the sterling to be so strong against the dollar yesterday was market embrace with positiveness, embrace with positivity, embrace with a positive mood, I would say, with the much dreaded announcement of that autumn budget by UK Minister of Finance or UK Chancellor yesterday, where previous negativity has already been priced into the sterling dollar. So what do I mean by this? So if you look at the chart of the sterling versus the dollar, all right, over here, so whatever negativity that was being so-called priced by that potential outcome of the UK autumn budget that was announced yesterday. So that has already been priced in by the negative move that's being seen on the 28th of October all the way up to the 3rd of November and even late last Wednesday over here. Then all of a sudden we see a bullish reversal back above the 20-day moving average, where we yesterday, prior to the announcement of the UK budget, we flipped to a bullish bias, because from a technical analysis perspective on the lower time frame chart, it starts to show signs of positiveness. So even on Tuesday, we flipped to a neutrality stance for those who followed my daily dose on a daily basis. So later I'll touch on more about that. What are the key intraday levels to watch out for? The latest one on the sterling dollar. All right. So from now, let me share with you what causes the pound to actually have that positive feedback loop yesterday was the UK Chancellor uh, give a bit of relief to the market participants by, yes, it raised taxes, but it also managed to actually hold the left wing of the Labour Party to support her and as well as the current Prime Minister by upping welfare, we call it benefits to actually lower income household over here. So what it did over here is that, yes, taxes were raised on ordinary workers and the wealthy, but nevertheless, this is to actually we call it satisfy the left wing of her party that threatened to topple the current leadership, which is the Prime Minister of UK, and they managed to actually survive this rebel of the left wing party by giving welfare giveaways and energy bill support for poorer household. And nevertheless, because of this the raise in the tax rates, this particular latest budget managed to offer a 22 billion fiscal buffer. So what do I mean by this? All right, so let me go all the way down to here. It did mention, yeah, all right. So it increased the physical buffer that markets view as a marker of stability by 12 billion sterling pound to 22 billion sterling. All right, so what you could see, this over here previously in blue is was under the Conservative government. So since October last year, it's been taken over by the Labour Party, and these are previous budget. All right, so right now the latest budget announcement allows for a physical buffer increase to 22 billion sterling. So that actually encourage give a brief of relief to the market over here, stating that we may that particular physical fiscal disaster by the UK budget has now been in a back seat. All right, so basically if you go look at it over here, who are the winners and losers of the latest budget announcement? So the winners are for sure the lower income family with children, and as well as pensioner and low paid workers. And also the bond market is being the winner yesterday, where Reeves, which is the UK Chancellor or the Finance Minister of UK, supply markets with a higher than expected 22 billion sterling billion buffer, putting that physical, we call it a deterioration of the UK fiscal budget in the backseat. Both the UK bonds and the pound rallied as investors took comfort in the Chancellor commitment of fiscal discipline or restraint. And also, you also benefit the investment managers and advisors, indirectly causing triggered a positive feedback loop in the UK stock market. So Reeves said that she will actually encourage more investment in UK stocks by cutting the annual cash ISA limit account. So what is ISA? ISA is considered, its long form is the individual savings account for UK citizens, where this particular account UK citizens can allocate into cash deposit or stocks, and whatever interest that is gained by the cash deposits is tax-free. So what I mean by over here is that it limit the cash deposit component of the ISA account for those who are under 65 years old to 12,000 pounds from 20,000 pounds. So that means, i.e., there is an excess of 8,000 pounds that can be allocated to stocks. And those allocated to stocks, whatever capital gain in UK stocks will be tax-free as well. So with a higher allocation of ISA account into stocks starting in April 2026, that causes a positive feedback loop into the UK stock market. So the UK stock market yesterday, which is the FTSE 100 index. All right, where is it? Over here. yeah, the UK FTSE rallied by 0.85%. All right, so that created a positive feedback loop into the FTSE 100 index, indirectly creating a positive feedback loop into the sterling pound as well. Right, so that's for the key mover of the US, key mover of the global markets yesterday. So on top of that, we continue to see a risk-on behavior in the US stock market, where the S&P 500, the Nasdaq 100, the Dow Jones, and the Russell 2000 all gaining positive return yesterday for the fourth consecutive session since last Friday over here, where the SPX ended 0.7%, the Nasdaq ended 0.87%, the Dow Jones ended 0.67%, and the Russell 2000 ended 0.8%, all almost on the same magnitude as we head to the Thanksgiving holiday kickstarting today. So bear in mind, from today onwards until Friday, there will be lower liquidity in the US stock market because the cash stock market is closed for a public holiday today for the entire US session. That means the US session will be closed today for the cash stock market trading, and will be a half-day session on Friday. All right, due to the Thanksgiving holiday, so there will be lower liquidity going forward. So for those who have interest in the benchmark US stock indices CFD, do be cautious of this lower liquidity going forward in these 2 days. All right, 2 trading days. All right, over here. So that sum up the first segment of the daily dose. Before we go into the second segment, very quickly, let's look at the heat map of the S&P 500. So the S&P 500 heat map shows continued bullishness in the technology sector, where NVIDIA having a significant outside weightage on the S&P 500 and the Nasdaq 100, given its significant market cap weightage, managed to survive again at the medium-term pivotal support, which I mentioned, 177.70, where NVIDIA managed to gain 1.37%, as it shook off its negative feedback loop ex-post earnings result last week, and also in competition with Alphabet Google, where Meta has made an announcement to actually sign up for Google TPU processor unit on top of NVIDIA Blackwell GPU chips. So yesterday there's a bit of profit taking in Google and Meta. So let's take a look at the chart of this NVIDIA, given its upside weightage on the US benchmark stock indices, particularly in the S&P 500 and the Nasdaq 100. Right. So very quickly, if you look at the US NVIDIA technical picture, so the technical picture, a quick recap, which I shared with you guys since last week. So what we could see over here is there's a U-turn over here, a U-turn. So I could see a V-shaped recovery, taking into account of these 3 candlesticks starting on Monday, Tuesday, and Wednesday. So managed to survive at the 177.70 key medium-term pivotal support lower limit. All right, so as long as this support level didn't break 177.70, what we could see is that the ongoing risk-on appetite on a medium-term perspective may continue on the major benchmark US stock indices. All right, and also on the backdrop of a firmer increase of 85% chance of interest rate potentially cut by as priced in by the Fed Funds Futures Trader, compiled by the CME Fed Watch 2, indicating that the Fed is still moving towards a interest rate cut cycle, and potentially there could be a third interest rate cut of 85% chance on the upcoming 10th of December meeting 2025, as indicated by the Fed Funds Futures Trader. And previously, it was a significant reversal from only a 30% and 40% chance that we see last week. All right, so that also created a positive liquidity feedback loop into the US stock market as well. All right, so that's covered the first segment of the day. Let us very quickly move to the second segment. Allow me to expand my screen so that you guys could have a better view of the charts. All right, over here. Okay, so let us start with the FX market first. All right, starting with the euro dollar. All right, so the euro dollar, yesterday we do have a bullish bias. So the bullish bias actually indeed do a retracement, which we highlighted. Minor retracement hit exactly at our pivotal support before shaping that bullish reversal. All right, so right now it's actually testing. It already hit our first resistance zone at 160 figure level, 116.15, 1.1615. So oops, where is it? Sorry, let me get it back again. Okay, so I'll make sure that the screen is on. Yeah, I think the screen should be good, right? The screen should be good. All right. So over here, given that it hasn't broken above 116.15, our resistance level, I don't want to be so aggressive to tighten my pivotal support level. So short-term pivotal support level still remains the same at 115.50 / 115.40. Only a clear break above 116.15 with an hourly close above it, then I will tighten my pivotal support level to 115.70. All right, over here 115.70. All right, so 115.70 will be my first support level to watch, not my pivotal support, unless we have a clear break above 116.15, that I will title it to 115.70. So for now, level still remains the same for the pivotal support, 115.50 / 115.40, to maintain this ongoing bullish bias in the euro dollar in a very near term, short term basis. Next resistance zone to watch out for will be the neckline resistance of this potential minor double bottoming formation at 116.50, 116.60, a breakout above it, potentially seek out the next intermediate resistance at 17.20, which is the minor swing high area of 17th of October and 6th of October this year. Only a bearish breakdown below 115.40 will invalidate today's ongoing continuation of that bullish bias stance to see a choppy downward drift down to test this last Friday minor swing low area at 114.95. So that's for the euro dollar. Next up will be the sterling pound. So the sterling pound also rarely hit our first resistance level at 132.50 over here. So given the fact that it hasn't cleared above 132.50 and the hourly RSI is at the overbought level, so potentially is the most overbought level since 1st of October. So it's the most overbought level within the last 4 weeks or so. So given that it's the most overbought level in the last 4 weeks or so, there could be a chance of a minor pullback. So minor pullback, first support zone to watch out for will be at 131.3215, 131.95, with the key medium-term pivotal support remains the same for sure. After yesterday minor bullish reversal and a retest of that 20-day moving average and the pullback support line of the former descending channel resistance from the high of 18th of September turns into a critical pullback support yesterday, all confluencing at 131.40. So unless we have a clear bullish breakout above 132.50, then I will tighten my pivotal support to 132.15, 131.95. So for now, pivotal support remains the same at 131.40, key medium-term pivotal support level to maintain this ongoing bullish recovery on the sterling pound. Next resistance level to watch will be 133 figure level, followed by 133.70, which is the 1.618 Fibo extension of this ongoing recovery from the double bottom minor low of 5th of November to 20th of November, and as well as this confluence with the minor swing high of 22nd of October and 28th of October. Only a bearish breakdown below 131.40 will invalidate today's bullish biasness to see a choppy downward drift towards 130.85, maximum the double bottom minor swing low area of 20th of November and 21st of November at 130.40 next. So that's for the sterling pound. Next up will be the Asia Pacific currency, starting with the Aussie dollar. So the Aussie dollar squeeze up expected, hit our first resistance level at 65.25, or actually it's a second resistance level. The first resistance level was a 65 figure level. So it hit our first resistance level, second resistance level already at 65.25, 65.40. And given that the RSI is also at a extreme overbought level right now at 75.14, so this level is the highest level since of 30th of September. So it's almost about 4 weeks as well. So it's a 4-week, the RSI hit a 4-week high, kind of an extreme overbought level. So there could be a risk of a minor pullback taking shape. So a minor pullback first support level to watch out for will be close to the 20-day moving average at 65 figure level over here. So with that, these are the two key support level to watch. First support level, 65 figure level. I will tighten my pivotal support level to yesterday's early US or session low at 64.85 over here. So tighten my pivotal support to 64.85. So as long as this minor pullback didn't surpass below 64.85, we'll still maintain a bullish bias on the Aussie dollar after this minor pullback ends. So why potential minor pullback? Because the RSI is at a 4-week high, so indicating a extreme overbought level, at least in the near term. So next resistance level to watch after 65.40 will be 65.50, followed by 65.80, which is the minor swing high of 13th of November. Only a bearish breakdown below 64.85 will see a choppy drift downwards towards 64.67 next, which is confluencing with the 20-day moving average as well. 200-day moving average as well, pardon me. All right, so that's for the Aussie dollar. Next up will be the dollar yen. So the dollar yen continues to plunge down lower over here, playing around with our first resistance level at 155.95 over here. So continues to see a series of lower high over here. This high lower than this high, this high lower than this high. So with that, I will use yesterday rejection level as my adjusted short-term pivotal resistance level at 156.75 over here. All right, so a breakdown below 155.95 potentially exposes 155.25, 155 figure level, which confluence with the important minor ascending trend line from the low of 29th of October, and as well as the 20-day moving average. A breakdown below this 155.25, 155 figure level may expose further weakness towards 154.40 next, and maximum 153.80/60 in the near term. Only a bullish breakout above 156.75 will negate the bearish biasness on the dollar yen to see a squeeze up towards 157.15. Only a breakout above 157.15 will see a substantial bounce back towards the 158 figure level, 158.35 resistance level, the zone over here, okay, which is this area here previously. If you go back, all right, this key important medium-term swing high area of 7th of July and 7th of January and 10th of January this year. Right, so that's for the dollar yen, still maintaining a bearish bias with an adjusted short-term pivotal resistance at 156.75. All right, so that's the intraday technical outlook and key levels to look out for in the near term on the 4 major US dollar pair. So let us now proceed with the major stock indices, starting with the Hong Kong 33 that is representing the Hang Seng Index. So for the Hong Kong 33, price action traded sideways below our first resistance level at 26,045, but managed to bounce off from the pivotal support that we highlighted yesterday at 25,700. So these are 2 key important technical levels to look out for. The hourly RSI has now managed to shape a higher low right at the 50 level mark, indicating some form of short-term bullish momentum. It starts to creep back into the Hong Kong 33. So with that, for sure, given that the first resistance level it has not been surpassed, the short-term pivotal support level remains the same at 25,700. A clearance above 26,045 will give more credence to the boost to expose the next near-term resistance level at 26,310. A breakout above 26,310, which is no confluence with the 50-day moving average, will increase the odds of a brand new bullish impulsive up move sequence that may have taken shape since the low of last Friday, exposing the next near-term resistance level at 26,695. Only a bearish breakdown below 25,700 will invalidate this bullish near-term outlook on the Hong Kong 33 to expose the next intermediate support level at 25,410, maximum 25,150, which was last Friday minus swing low. So that's for the Hong Kong 33. Up next will be the Japan 225, representing Nikkei 225. So Japan 225 hit our important first resistance zone of 50,250, upper limit 50,730, which is the minor swing high area of 14th of November and 14th of November that has kept previous bulls in check since 20th of November, where it tried to hit this level and managed to did this bearish retracement over here. So given that it's coming very close to the first resistance zone over here, the hourly RSI so far hasn't hit an extreme overbought level yet and did a minor pullback as we are speaking right now. But while doing a minor pullback, it didn't flash out a bearish divergence, all right, indicating this ongoing healthy up move that may take shape. So with that, I would tighten my pivotal support level for today, a short-term pivotal support, to taking into account of yesterday's European session low over here, or the start of the US session at 49,470 over here, which price action managed to did a minor U-turn on the upside before hesitance take shape in today's Asia session. So I'll tighten my pivotal support level using as a short-term pivotal support for today at 49,470. A breakout above 50,730 will potentially expose the next resistance level at 51,530 in the near term, which confluence with the minor swing high of 4th of November and 13th of November, and as well as a key Fibo extension level in this ongoing recovery from the low of 21st of November and the low of 25th of November after the retest at its 50-day moving average and the lower boundary of this medium-term ascending channel that has been in place since 7th of April 2025 low, and that's confluence with the 2 times Fibo extension very closely to the 51,530 graphical intermediate resistance level. Only a bearish breakdown below 49,470 will invalidate or negate the bullish bias on the Japan 225 to see it drifting downwards to retest the medium-term pivotal support level again at 48,450. All right, so that's for the Japan 225. Next up will be the Germany 30. So the Germany 30 also managed to drift upwards over here, hitting our first resistance level, and right now attempting to do a minor pullback at the 20-day moving average. So potentially there could be a pullback taking shape in play. First support level to watch out for today will be the former minor swing high turns to pullback support at 23,630. Maximum will be the 200-day moving average, which is the former minor swing high area of 20th of November and 25th of November. Breakout on Wednesday, did a pullback during the European session before shaping a push up during the later part of the US session yesterday. So with that, I will tighten my pivotal support level at 23,480, this important psychological level over here, and so correspond to the 200-day moving average as well. So as long as this pullback didn't surpass below 23,480, I will have a bullish bias view on the Germany 30 with the next resistance coming in at 23,960, that confluence with the 50-day moving average, followed by 24,140 next, which is the minor swing high area of 14th of November. Only a bearish breakdown below 23,480 will negate this bullish bias view to seek out a retest of 23,370, which was yesterday pivotal support. Only a breakdown below 23,370 will see a further drift downwards towards 23,080. Maximum 22,935, which is the critical minor swing low of last Friday. All right, at 22,935. Onward next will be the major US stock indices, starting the US Wall Street 30. So bear in mind there will be lower liquidity going forward because the cash US stock market will be closed for the entire day today for a Thanksgiving holiday, and on Friday it will need to be open on a half-day basis. So with that, bear in mind there could be some form of profit taking shape. So the US Wall Street 30, representing the Dow Jones Industrial Average, managed to drift up as expected, almost hit the second resistance at 47,750. So given that the RSI had hit the overbought level over here, hasn't really extreme overbought, because the overbought level is much lower than the previous overbought level of 12th of November, but he has already exited from the overbought level at 70, indicating there could be some form of a minor pullback taking shape. So first support level to watch in this minor pullback was yesterday, first resistance at 47,340. Maximum will be the 20-day moving average. That will be my Titan short-term pivotal support level for today, 47,035. So as long as this pullback didn't surpass below 47,035, thereafter there could be another bullish uptick on the US Wall Street 30 with the next resistance coming in at 47,750, followed by 48,450 in the next few days, which is the minor swing high of 12th of November. Only a bearish breakdown below 47,035 will negate this bullish bias to see a steeper pullback towards 46,810, maximum 46,570, which is the zone between the 50-day moving average and the former minor swing high area of 21st of November, which was last 21st of this Monday Asia session high. Okay, this Monday US session high now turns into a pullback support level, pardon me, at 46,575. So that's for the US Wall Street 30. Next up will be the SPX 500. So the SPX 500 hit our resistance level, the second resistance, which is the minor descending trend line that is still in place from the fresh all-time high of 30th of October. So there could be a form of a minor pullback given that the RSI has really exited from the overbought level. So first pullback support level to watch will be the 20-day moving average at the zone of 6,780, 6,760. Maximum will be at 6,710, which corresponds very closely to the 50-day moving average as well. And if we do the Fibo retracement of this entire move up, all right, it will confluence with the 38.2% Fibo retracement. All right, so as long as this minor pullback didn't surpass below 6,710 maximum, thereafter the SPX 500 may shape another bullish upleg towards the next resistance level at 6,880 after 6,830 has been taken up on the upside, which is the minor swing high area of 31st of October and 12th of November. Only a bearish breakdown below 6,710 will invalidate this bullish buyer's view to see a deeper pullback towards 6,660, 6,610 level. So if you do the Fibo retracement, that will be a deeper pullback close to the golden ratio of 61.8% and the 50% Fibo retracement, very confluencing closely with the graphical support level at 6,660 and 6,610. Okay, onward, onward next will be lastly the tech heavy Nasdaq 100. So the tech heavy Nasdaq 100 has broken above the descending trendline resistance from the high of 30th of October, giving it as a higher beta play, whereas the Nasdaq 100 has yet to break. All right, hasn't break out yet. So given that the RSI also exit from the overbought level, there could be a minor pullback. So it already hit the second our resistance level at 25,290 as well that we mentioned yesterday. So there could be a minor pullback. So pullback line will be the yesterday's US session low at 25,097. We also confluence with the former descending resistance now turns into a pullback support level, also correspond very closely with the 20-day moving average, acting as a similar support level closely at 25,097 as well. So maximum will be this graphical support level over here, former minor swing high, now turns into a pullback support at 24,920. And if you do the Fibo retracement of the low of last Friday, oops, sorry, over here, let me do it again for you guys to see. Oops, let me that constitute closely the 23.6% Fibo retracement, a bit higher rather than the 38% because it has broken above the descending trendline resistance yesterday. So using 24,920 to cap this potential minor pullback move before another uptick that may take shape for the next resistance to come in for the Nasdaq 100, that will be at 25,455, maximum 25,760, which is the all-important level where previously bulls got capped since 5th of November, 6th of November, and as well as 12th of November before that onslaught take place, driven by NVIDIA lackluster share price movement. So a clearance above 25,760 for sure will increase the odds of a fresh bullish impulsive upmove sequence for the Nasdaq 100 to seek all-time high. So that could also create a positive feedback loop into the entire US stock market as well. So only a bearish breakdown below 24,920, today's Titan short-term pivotal support will invalidate today's bullish buyer's view to see a deeper corrective pullback towards the next support level at 24,540, which is the minor swing low area of 25th of November. A breakdown below it may take us down lower towards 24,170 next. All right, so that covers all the intraday technical outlook on all the major stock indices that we do on a frequent basis. Let us now focus on the commodities market, starting with gold XAU/USD. So for gold XAU/USD, yesterday we do 2 days ago we do have a bullish bias because of the price action breakout above 4,100 level, 4,130. So it's now coming very close to our resistance level at 4,208 yesterday. It's going to churn upwards, but as it continues to churn upwards with a series of higher high over here, but the RSI is not reflecting the same movement of the raw price action of gold. Instead, it's sloping downwards, a conflicting signal called a bearish divergence condition, indicating this move up yesterday is lacking of upside momentum. So because of this bearish divergence for today, on a very shorter term basis, I'll flip to a neutrality stance. So it may just trade sideways between 4,208 and 4,105, which is my short-term pivotal support that we have since 2 days ago. So neutral between 4,208 and 4,105 due to the lack of upside momentum in the short term in gold XAU/USD, as depicted by the ongoing bearish divergence that's being seen on the hourly RSI. So that's for gold XAU/USD. Lastly will be the West Texas oil. So the West Texas oil continues to trade in a lackluster fashion. yesterday it bounced, but the bounce got rejected at our first resistance level at 58.72. And given that it didn't break down below our near-term support level of 57.54/57.31, we'll still maintain that bearish bias view using 59.32 as my short-term pivotal resistance level, now coming very close to its downward sloping 20-day moving average. Still maintain that bearish bias for it to drift down towards the minor sideways range configuration that have taken shape since last Friday, which is at 57.54/57.31. Only a breakdown below this level may expose 57.8 next, which is the minor swing low of 17th of October and 22nd of October. Only a bullish breakout above 59.32 will see a mean reversion rebound taking shape back towards the 50-day moving average, acting as a resistance level at 60.40, maximum 61.30/61.70, where the bulls got rejected on 3rd of November and 12th of November. All right, so that's for West Texas crude oil. And that sum up all the intraday technical outlook on the broad-based cross asset classes. So before we go, let's take a look at the economic calendar. What are the key data to look out for today, Thursday? So we know that Thursday, today will be a Thanksgiving holiday in US. So it will be a rather quiet US session for sure. So what other things to look out for as the European session kickstart? So just bear with me for a couple of seconds over here. So as the European session kickstart over here at 3 p.m. Singapore time, we have the Germany GfK consumer confidence data. So for the month of December, so this is a leading economic data. So that could influence the euro dollar, the euro crosses, and as well as the Germany 30 CFD index. So market participants expecting a slight improvement. Previous month of November, it was negative 24.1, slight improvement to negative 23.2. So if we start to see a further improvement to above what market is expecting, that could create a positive feedback loop into the euro dollar, the euro crosses, and even the Germany 30 CFD index. Then thereafter, you have one ECB official speaking, ECB Cipollone speech at 4:30 p.m. Singapore time, and we have the aggregate economic sentiment index, so various economic sentiment data. So also a forward-looking forward-looking data for Eurozone, but this is the aggregated one for Eurozone out at November Singapore time. For the month of November, pardon me, Singapore time 6 p.m. So market is also expecting a slight uptick for improvement to 97 from 96.8 that was printed in the previous month of October over here. Then thereafter at 8:30 p.m. will be the ECB monetary policy meeting account. So this is actually the minutes of the prior ECB meeting where ECB kept interest rate for the third consecutive session holding it. So a market participant will be viewing the debate among ECB members, whether more are skewing towards indicating that they are coming, they have already ended the interest rate cut cycle in Eurozone. So that will be out at 8:30 p.m. Singapore time. Then thereafter, we have two ECB officials speaking, ECB Theo Minen and ECB Machado speaking at 10 p.m. and 11:45 p.m. Singapore time. Then thereafter, there'll be a quiet US session as the US session is closed for a public holiday for today for entire day, Thanksgiving holiday. And before the start of our daily dose tomorrow at Friday, several key important Japanese data that may influence the dollar yen and the yen crosses will be the leading inflation trend for Japan. That will be the Tokyo Core CPI data. So Tokyo Core CPI data, market is expecting a slight downtick to 2.7% from 2.8%. But if we were to exclude the food and energy, the core rate that is much more important, that is being closely watched by BOJ officials. Trading Economics is expecting a slight uptick to 2.9% from 2.8 previously printed for the month of October. Then thereafter, we have retail, that is 7:30 a.m. Singapore time. Then thereafter, we have retail sales figure at 7:50 a.m. for Japan, and industrial production figure out for the month of October. So these are several key important Japanese data that may influence the dollar yen and the yen crosses before the start of our daily dose tomorrow at 7:30 a.m. and 7:50 a.m. Singapore time. So with that, that sum up today's daily dose of market insights. I'm Kelvin here, wishing you all a great day ahead, and we shall speak again tomorrow. Thank you.